Hey everybody, Courtney Smith here with our Wall Street winners for January the 10th, 2022. I can't get used to it. What can I say? Of course, I'm totally used to that. Okay, so basically, we've been talking about this weakness. We talked about the seasonal weakness that we're going to see. And I think really the seasonal story is the story for the week, for the year, I should say, because of Fed policy, fiscal policy. We've got a lot of problems coming up this week. There's still some bullish factors, still a lot of liquidity going into the stock market, coming out of the bond market. Still a lot of money being pumped by the Fed, still a lot of stock buybacks, et cetera, et cetera. So we're going to have a real mixed bag this year, and it's starting right now. We'll get to the seasonal picture, but so far it's worked perfectly. Let's take a look here. So we made new all-time highs early in the week and then just went straight down. Now we're running out of gas, and we'll probably start to rally. Monday and Tuesday are two very bullish seasonal days. The rest of the week, pretty ordinary, but notice how the purple predictor is failing. We made a higher high on the stock market, but the purple predictor did not. That means the smart money took advantage of this rally to bail out. Let's take a look at the Dow Jones. Dow, much better situation. Buying pressure greater than selling pressure. The sell-off, not so bad. So basically, once again, Dow stocks are leading the way. NASDAQ is failing. Purple predictor continues to fail here. So the message is still clear. Stay in high dividend, old style stocks, Dow industrial type stocks, and stay away from high tech, things that have earnings in the future. No, the market wants earnings today. It wants dividends. It doesn't want no dividend stocks. So you have to change our strategy. Seasonality still remains neutral at this point. It's obviously not going to turn bullish anytime soon. Now here's what I was talking about. This weakness early in January here. Pretty much until the third week of January, kind of downward. Yes, we got the downward slant of the first week. Now we're going to get a little bit of a bounce this week, then drop to new lows again, then get another. I think this line right down here, this reddish line, I think it's this kind of line down here, not the black line, but right now I'm kind of looking at the red line as our preferred scenario. Asset allocation, money is coming into the stock market. That's what's holding it up, because people are bailing out of bonds. Bonds are collapsing, and they're taking money out of the bond market. Why? Because we're starting to see this idea that bonds are going to lose money. So if interest rates go up, that means new money can go into the bond market and take advantage of those higher yields. But people who already own bonds, they're losing money on the bonds. So they're bailing out, and what are they doing? They're buying stocks. But as you can see on our risk indicator, they're not buying risky stocks. They're buying conservative stocks, less risky stocks, consumer staples, utilities. In other words, things with high yields. The bond market, they're getting hammered. They can take their money out of a bond, which is losing money. It's going down in price. Move it over to utilities and consumer staples that are going up in price, and get a dividend yield that's higher than the bond yield. Duh! So we'll do the same thing, of course. Global shares, who cares? Yield curve, this is big. Yield curve breaks to new highs. We're almost back to where we were before. This is actually kind of bullish for the economy, because it's saying that the economy's strong, but it's also saying inflation is strong as well. And that's not good for the stock market, not good for the economy. So we'll have to monitor that. But the yield curve going up is good for financial instruments, financial stocks. So I'm getting much heavier involved in financial stocks now. Bonds, this is what we're saying. Bonds are collapsing. They even broke the lows we made last fall. They're heading much lower. Our indicators, CRB says higher interest rates. Gold says modestly higher interest rates. But look at the T-notes in Germany skyrocketing up. So guess what? The green line, that's our interest rates also going up. So look for higher long-term interest rates in the long end. The Fed will eventually raise short-term interest rates, but it'll be slower than the market thinks. Dollar, very stable here, mainly because of the euro. But anyway, and also Canadian dollar, also pretty stable here, pretty boring. Now, if the dollar's boring, then gold is boring. And it is kind of boring, except we did get a little bit of a rally here, and then we kind of took it all away and went back into this previous trading range. I'm not bullish on gold. I keep trying to be bullish on gold. I look at those inflation numbers, I look at those real interest rates, and I just can't get excited. So I get excited, I should say, but then I look at the chart and I go like, well, we're the same price we were 6 months ago. I only buy things that are in bull markets. Gold indicators, neutral, bullish, bearish. You got it? So guess what? We need to stand aside. Crude oil. Now, I mentioned we'd perk up. We got up to 80. I keep examining it, and as you know, I'm one of the best oil analysts in the world in terms of calling every twist and turn. I think we're going to sell off early in the week, but I think we're going to head back up to the 85 area. Demand is, here's what it is. The U.S. economy is going to be slower than people expect, so that reduces demand from the United States. But we also are going to see an increase in demand from Europe and Asia as they come out of COVID lockdowns. So they're going to pick up the slack. So we're going to see a slight increase in demand. In addition, I think that the Biden administration is still choking off the American frackers, so we're not going to see an increase in supply there. We are going to see a slow increase in supply from OPEC Plus, but I think the demand might be a little bit stronger and get us back up into the mid-80s area. Bitcoin, as I told you, we've been bearish for quite some time and really got much more bearish last week. I said if we broke down, you've got to be short. Bitcoin could be going all the way down to 5,000. The next major support is over here, and we're just above that. Really, if we break that, then we're going to this old support at 25. It's a bear market, don't you know? You got to be short. That's the way to play Bitcoin right now. Do not listen to the Johnny One Notes in Bitcoin, okay? Do not listen to them. Listen to your Uncle Courtney, because I play both sides of the market, buy and sell. The Johnny One Notes only buy, and as a result, they get hammered when the price goes from, 64 to 41. It's only a 50% decline. What do you want? Okay. All right. Thanks, freebies. Love having you here. But, of course, why would you want to stop watching this great video when you could become a fully paid up member, and it's over twice as long when I get into more advanced analysis and specific trades with buy and sell recommendations. Go to WSW 2021 and sign up right now. There's some special bonuses there as well.